for the banking system, I have not got a clear visibility of the data. I would not be in a position to comment. But as far as we are concerned, we have slightly tweaked our deposit rates in some structure, in some periods for the term deposit. And likewise, we have also tweaked our MCLR because there was elbow room which was available.
Yes.
And that was something which helps us in ensuring that there should not be any impact on the NIM. And
Okay.
as far as we are concerned, our domestic NIM last year was 3.43. So I expect our domestic NIM should be around the same number.
Oh, that's good to hear, because there was a worry about a few basis points lower NIMs for banks. Now to come to what Surabhi was asking you about loan quality. We hear about MFI loans under pressure. We hear about unsecured loans under pressure, credit card loans under pressure. What's the situation in SBI?
As far as we are concerned, we don't have a challenge as far as our unsecured book is concerned. I've said it in the past also. And even now also, I maintain my stance. Because when it comes to our unsecured book, we are extending that to those who are maintaining their salary accounts. We have got a very clear visibility of the money flowing into their accounts. And we are very mindful in terms of their repayment capability, etc. So we don't have any challenge, and our unsecured book stays as good as it used to be in the past. And
But
as far as
MFI, sir?
MFIs are concerned, well, of course, I think the rural went through some challenges at some point of time, but now we are seeing positive trends. But yes, of course, we do hear from MFIs who are having a loan book that there were some challenges. But I think as far as we are concerned, we don't see any kind of a stress. In fact, in our case, we are seeing even better trajectory as far as the loan growth to the MFIs are also concerned, and also the quality of the loan book also for the MFIs.
Okay, that's good to hear. Now, the big trend, and yesterday we went, gangbusters reporting it, is the way in which promoters are taking advantage of this stock market largesse. So much of either fundraising or people, selling off their holdings. When are you coming to the market? You have a lot of subsidiaries.
No, as and when there would be a felt need, we will certainly reach out to the market. But we look at all possible options, and we evaluate them well in terms of the cost. So that is something which is a deciding factor and the guiding factor for us. So
when you need, the market won't be kind. And in any case, your CET1 is lower than other banks, maybe with good reason. You have a huge government holding as well. But nevertheless, you can want your CET1 to be equal to the other banks if you wish. The market is kind. So should we expect anything?
I would like to give a perspective when people talk about the CET1. The CET1 should be seen in the context of the RWAs. And, if at all my CET1 is being compared, when my RWAs are 52%, is being compared with somebody who has got an RW of 85%, it's not a fair assessment. So I think that has to be kept in mind. So from that perspective, in fact, what we have seen is that in last about 3 years' time, we have brought back about 1.10 trillion worth of profit into the balance sheet. So that itself has given us the muscle. And even at the current level also, we have got adequate...
No, Mr. Khara, I'm not alleging that your balance sheet is weak. I'm only saying that you can always want to... You can always want to increase the CET1 because the market is in a good spot. So anyway, without all these arguments, are you looking to tap the market, and which subsidiary would you look at?
As far as subsidiaries are concerned, we have not yet given a thought. And as far as bank is concerned, we certainly intend to raise some money from the market, which should be either in terms of bonds.
Okay.
So that is something which have already come on. It is already in the media also. And we keep on evaluating our balance sheet position. And even at the current level, we can safely support another 7 trillion worth of asset growth. But yes, of course, we keep on evaluating our capital position. And at the right and opportune time, if need be, we will reach out.
So not ruling out an equity capital raise this year, sir? You're not ruling it out. It could happen.
So I always keep the options open. I don't close options.
So one more expected credit loss. 1 minute.
Exactly.
Surabhi, 1 minute.
On that. Lata, that's exactly what I was asking.
Yeah, expected credit loss, sir. Are you expecting RBI to pursue it? What is the status now?
Regarding? Sorry, I could not get
Expected credit loss rules. The expected credit loss rules.
I think if at all it comes for banks like us, we have got excess provision which is there with us. It will be rather good. But yes, of course, it is a decision which has to be taken by the RBI.
Okay, so that is on ECL. I mean, in the past, you've had a view on it that perhaps it's not something to be sort of too concerned about. But just any further sense on if the norms come in the format in which they were discussed, then what could that mean for SBI? That's on one hand. And the other burner that we've got burning is on project financing, right? You said right now there's no risk on the horizon, but the RBI is clearly trying to shore up the buffers, as the credit cycle picks up on the corporate side. So on the project financing norms and the higher provisioning requirements that are being spoken of, what's your view there?
See, as far as ECL is concerned, first and foremost, I would say that over the period of time, the loan book of the banking system has improved significantly. So if the ECL comes, perhaps whatever competition was done, maybe about a year back, banking system would be much better. And we are certainly much better as compared to where we were last year. So I think from that point of view, we don't expect any kind of an impact on us as far as the ECL is concerned. Your second question relating to the provisioning for the project
financing.
Yeah, it was essentially, as of now, it's a discussion paper. I think the deliberations are going on. Various stakeholders are reaching out to RBI with their views. I'm quite confident that RBI will be giving due cognizance to the viewpoint of various stakeholders and will come out with some kind of a measure which will be balanced in terms of its nature. So that's what my sense is. But yes, of course, we are evaluating. For us, we are not envisaging any challenge. But yes, of course, we are very mindful of the views of various stakeholders, and we have to keep that in mind.
So provisions may go up, you think, if it is almost the way the discussion paper is?
No, again, if at all it comes through the ECL structure, then perhaps it will undergo significant change.
Okay, so I think we have to just wait by and see what the final guidelines are on this, and then of course we'd really be, happy to get your perspective on it. Thank you very much, sir. Great conversation with you. Really appreciate you taking out the time this morning. All right, that is the word. Thank you so much. That is the word from State Bank of India. Right now, we have to quickly get back to the market. We have Mitesh joining in, and the market's been fairly volatile, with the mid-caps outperforming, but the other large indices are absolutely quiet and flat. Mitesh, what are your trades now?
So as I said in the morning, I think today is one day when we have got some sell calls, and I think there's some choppiness. I think there's some that signs of early profit booking is playing out. But right now I have a buy on AB Capital, which has managed to get past the pivot of 240. So keep a stop at about 239, maybe even 238.5, and look for a target of roughly around 260 on the upside to begin with. We can eventually look at higher levels.